what we saw last week when there was a rumor that BlackRock's ETF had been approved, and you saw Bitcoin just jump in price. It was about 10%, I think, in a matter of minutes, right? So that in and of itself is an indication that there's pent-up demand for this, and they know it. And so even if a lot of that was short covering, it shows that we know that this is news that everybody's waiting on. I do not believe that this news is priced into the Bitcoin market yet. It's starting to get priced in today, as you saw, and I believe it will continue to do this. Of course, it's going to react to what's going on in the economy and market as well. It is still considered a risk asset for many holders. And so until we get through that period, it's hard to tell. But I do believe that once we have the 3 main or 4 main ETFs approved, that the spot ETFs approved, that there's going to the market value of Bitcoin could double very quickly. And I don't think that would not be a surprise to me at all. It would actually surprise me if we don't double, or at least have some sort of major 50, 60, 70% move on the actual approval of a number of those.
The Bitcoin price is about to double is the message out from James Lavish. Last week we saw Bitcoin rocket up from $29,000 to $35,000, a 15% increase, all on the rumour of the spot Bitcoin ETF. Which begs the question, how high will it go on the actual approval? For those who don't know who James Lavish is, he's the managing partner at the Bitcoin Opportunity Fund, and he has decades of experience in the hedge fund industry, which means he knows how institutional players invest. Lavish believes the move we saw last week is a huge indication of the pent-up demand for Bitcoin. He argues that the spot Bitcoin ETF news isn't baked into its price. Once we get the actual news of approval, Lavish expects a minimum 50 to 70% move upwards, and he wouldn't be surprised if the price doubled. Make sure to stick around to the end of the video where Lavish breaks down why he's so bullish on Bitcoin for the future. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
As far as Bitcoin goes, well, that's just kind of another question altogether. As much as I want it to be and believe it should be a safe haven, I do believe it's a safe haven long term. In the next year, I can't say that I believe that this is going to be the ultimate safe haven in the next 2 months, 6 months. I don't know. It's still very volatile. There's just not enough money in it yet. I do believe it will get there. Ultimately, it will be the ultimate safe haven, and it will be the ultimate asset to hedge yourself against massive money printing. But I do believe today what we're seeing is not unreasonable speculation or exuberance around the probability that there's a spot ETF that's approved soon, whether it's by the end of the year or early next year. We're talking 10, 12 weeks that people are starting to expect that and that in and of itself is a major driver of assets to this asset. So people will be moving out of certain things, long bonds, and into something like Bitcoin as this becomes a separate class of an asset class. Gary Gensler hasn't really had, in my mind, he hasn't had reasonable, defense for not allowing the spot Bitcoin ETF to be approved to this date. And so, but when you have large, massive players who have between the two of them, tens of trillions of dollars of assets between BlackRock and Fidelity, it's tremendous pressure on them all to figure it out, because it's saying that the people want this, investors want this, they want this easy version of Bitcoin for them to be able to buy and sell in their portfolios. And why it's so important is, I've talked about this before, is that, look, it's very difficult for small institutions and even some large institutions to buy and own Bitcoin. It's a very large, it's a tall hurdle for them to get over in their own operations, right? Because there are legal issues, there are settlement issues, there you've got to who's going to custody the Bitcoin, where's it going to trade, how are they going to market? There's a lot of issues they have to work out, and it's easy for you or me to just go into Coinbase, buy some, put it in a wallet, no problem. But for the institution, it's much more problematic, and it's a larger question for them. So what does this ETF do? Well, it translates Bitcoin into the securities language that they already know and speak, and they do business in every day. They can buy it on the New York Stock Exchange. They can settle it on the New York Stock Exchange. They can have their prime broker custody it, and they can margin against it if they need to with cash. And it's all right there. There's no difference between that and owning a spider for them. And so that's what's important. And so that in and of itself will bring, in my opinion, a tremendous amount of liquidity into this asset. It becomes so easy to buy. We've seen problems with spot ETFs for gold. And the problem is it's difficult to audit the gold in their vault and determine that whoever is sponsoring that ETF holds enough gold that if you wanted to transfer your certificate for the gold and take custody of the gold, we don't know that we've seen there are problems that it may or may not be there. It may have been rehypothecated. It may have been lent out. Now, the difference with a Bitcoin ETF, as long as it is clearly delineated this way, and the end of the final ETF that is approved is shown that it will be able to be audited simply and show exactly where these addresses of every single Bitcoin it owns is, and that it hasn't been moved or rehypothecated, that it is sitting there exactly where in the wallets they say it is, or in that institutional custody they say it is, then it's different. That it won't have the same risk in my mind that you would with a gold ETF, for instance. Now, that said, we all know as Bitcoiners that there is nothing that beats buying and holding Bitcoin in your own wallet and knowing the address and your keys yourself. There's nothing that trumps that. As long as you keep hold of those keys, you memorize them, whatever you need to do, that is the only way that you can ensure 100% that your Bitcoin won't disappear. Because in reality, if you have an ETF, it's still somewhat of a paper market in that you have counterparties. You have BlackRock that's actually holding it, and you have to trust that BlackRock is holding it and that their custodian, if they're not using self-custody, or if they don't have insurance on it through Lloyd's of London or whatever it is, that it is there for you. So there's always that question, always. And right. You'll never be 100% sure. But I can tell you this, Michelle, if you're an institution and you're staring down the career risk of buying and holding Bitcoin yourself in wallets that you've created with your internal process, that's going to be a much larger, taller hurdle to get over than just simply buying an ETF just like you would buy GLD. It's so much easier. It will bring in money from that world that it's just not available right now. If you're a registered investment advisor, you likely cannot do it for the base of your investors. Bitcoin is the exact opposite of a CBDC. And that's the real point of all of this, in that you've got fiat that's troubled, that we're seeing is troubled. You've got endless amounts of debt that are coming into the market that are making every single dollar currency out there, whether it's the yen or the euro or whatever it is, every sovereign that is printing their own money and issuing their own debt, their currencies are becoming less valuable. You've got that problem. Then you've got the CBDC problem, where you have the European Commission saying that they're going to issue, it's just a digital currency. it's no different than what you've been using all along. That's a flat out lie. Of course it's different. And it's going to have restrictions for certain uses and for people in the future, in that you will not be able to use your money freely. That's not freedom. When you expend your energy and you store that energy in the form of money in order to use it later, that's freedom, as long as you can trust the money. But if you can't trust the money, then you can't trust the freedom. And I think that's the real crux of all of this. And that's the interesting part. And if Larry really believes that, and he really understands that, then BlackRock they're in the position to bring Bitcoin to a much wider audience, and that's the key to the whole ETF. I think Larry's change of tune and heart on the ETF and Bitcoin has to do with profits. Okay. I mean, that's just as much as I wish it would. As much as I wish that he is a true believer and he understands that Bitcoin stands for freedom. I think it's more ironic that he said that at the same time that Christine was saying the other thing, because pushing CBDCs. Because when you look at the landscape of the major investors and the major businessmen of this nation, and you look at the Jamie Dimons of the world, and you look at the Warren Buffetts of the world, they're not looking at Bitcoin as something that they can profit off of. It's disruptive to their businesses. It's disruptive to the things they've been doing and the way they've made money for decades and decades. But Larry Fink sees a different path. He sees a path as BlackRock, that he can create something that can benefit not just the market, but BlackRock in the form of large profits, because he sees pent-up demand. And that's really the big key here. He sees this pent-up demand for this product, and the market is ready for it and asking for it. Any way you shape it, any way you cut it, I'm super optimistic about the future of Bitcoin and investing in that ecosystem, because these products are coming to market. The demand is there. It will eventually tip over into a safe haven asset, or just a completely separate asset class that's uncorrelated to the risk market. And so I am extremely optimistic about that. And I see this as a space that's going to grow rapidly and exponentially over the course of the next 10, 15, 20 years. So BlackRock coming into it, one thing I want to say is that when people hear BlackRock and they hear that they have $10 trillion, they think that BlackRock is going to own $10 trillion of Bitcoin. Wow. That's not, better. I know you do. But for the listeners, BlackRock being involved, it's a business for them, that's the bottom line.
So there's James Lavish with his extensive experience in the hedge fund industry and his role at the Bitcoin Opportunity Fund. Lavish offers a unique perspective on how institutional investors are approaching Bitcoin. His prediction of a significant price increase, possibly even a doubling following the approval of the Bitcoin ETF, underscores the latent demand and optimism in the cryptocurrency market. This is not just about numbers, it's about understanding market dynamics and investor sentiment, areas where Lavish's expertise shines. If you found today's video valuable and insightful, please consider subscribing to the channel for more financial analysis and expert opinions. Your support means a lot and helps to continue to deliver quality content. Subscribing is free and you can change your mind at any time. Thank you for watching, and don't forget to like and comment below with your thoughts on Bitcoin's future. Will you be adjusting your investment strategies based on these insights? We're eager to hear your perspectives. Anyway guys, hope today's video provided you with some value. I'll see you all in the next one, and as always, all the best.